If you're listening to this right now, you're probably holding a piece of paper that just ruined your morning. It says CP 504 in the top right corner. And right in the middle, in bold, terrifying font, it says, Notice of Intent to Seize Your Property. And if you're like 99% of Americans, your brain just went into panic mode. You're doing the math on disaster. And you're wondering, is my debit card going to work at the gas station tomorrow? Is my paycheck going to hit my account on Friday? Or is it just going to disappear into federal void? Are they coming for my house? I want you to stop. Take a breath and look at me. I'm looking at the data right now on my screen, and I'm going to tell you exactly what's happening inside the IRS computer systems at this very second. My name's Allen Lenth. I run Executive Tax Solutions. I don't just read these notices. I reverse engineer the algorithms and send them. I help people settle millions of dollars in tax debt every single year. And today, we're going to deconstruct the CP 504. We're going to take away the fear, we're going to strip away the mystery, and we're going to replace it with leverage. And before we get into the solution, I have 3 specific escape routes for you today. We need to define the threat. We need to be precise here because the IRS runs on precision. So technically speaking, what is the CP 504? I'm looking at the statute right here. Under Internal Revenue Code section 6331D, the IRS is legally required to provide you with notice before they levy your assets. The CP 504 is what we call the conditional notice. Technically, it is defined as the notice of intent to levy. But here's the distinction that most people miss. And honestly, most CPAs and enrolled agents like myself miss too. The CP 504 grants the IRS the immediate authority to intercept specific federal payments. And this is the big one, state tax refunds under the Treasury Offset Program. However, typically it doesn't satisfy the final legal requirement to seize your wages or empty your bank account yet. That specific power usually requires the issuance of a letter 1058, also known as the LT11, which grants you collection due process rights. So in plain English, the CP 504 is the warning shot. It is an automated system moving your case file from the status of billing to a status of enforcement. The gun is cocked, but the trigger hasn't been pulled yet. Now, let's talk about the machine and the 2026 reality. So, when we talk about your actual life in 2026, because the game has changed, we need to address that. I want you to visualize something. You ignore this letter, you toss it in the to-do pile on the kitchen counter, you think, I'll deal with this next month. Here's what happens in the background. The ACS, or the automatic collection system, is a massive algorithm. It doesn't sleep. It doesn't take lunch breaks. It checks your file every single day. 30 days from now, it sees that you haven't responded. It sees silence, so it executes a line of code. It prints the letter, and that letter, once again, is the LT11. And then, 30 days after that, you walk into the grocery store, you have a cart full of food, you're stressed, you just want to get back home and cook. You tap your card and the checkout, beep, decline. So you try it again. Maybe it's the chip, beep, decline. You check your banking app on your phone. Your balance isn't 0, it's negative. Why? Because the IRS sent a digital levy to your bank at 0800 or 8 o'clock in the morning that morning, and by law, the bank froze every penny you had, up to the amount of the tax debt, and held it for 21 days before sending it to the Treasury Department. That money's gone. You can't pay rent. You can't buy the food in your cart. That is the reality of the CP 504. It is the countdown clock to that moment at the grocery store. And listen, this isn't 2020 anymore. Back then, the IRS was broken. They were answering 10% of their phone calls. They paused collections. And in 2026, however, thanks to what's going on with the government, the machine is fixed. They have hired thousands of new revenue officers. They have upgraded the IT infrastructure, basically got rid of most of it. They've linked their systems to the state DMVs. They've linked with professional licensing boards. And if you're a realtor, a nurse, a contractor, they know where you are. The gap period between the CP 504 and the empty bank account used to be months. Now, we're seeing it happen in weeks. And here's the hidden killer. So there's a hidden threat in this letter that I think is actually worse than losing cash. Everyone focuses on the levy, or taking your money. Nobody talks about the lien, just taking your credit. I was looking at filing statistics this morning, and if you owe more than $10,000, the CP 504 is the trigger before the lien filing determination. The ACS computer, remember the thing I talked about earlier, is programmed to protect the government's interests. And it does that by filing a notice of federal tax lien. Now understand what this is. This isn't a private letter sent to your house. This is a public document filed at your county courthouse. It lists your name, your address, the amount you owe. It tells the world the United States government has first dibs on everything this person owns. Think about the damage that does. Your credit score? Nuked. Instantly. We're talking about a 100-point drop overnight. You want to sell your house? You can't close. The title company will see the lien and say, sorry, IRS gets paid first. You want to refinance to get a lower rate? Impossible. You work in finance and insurance? You have security clearance? I've seen people lose their careers because of the public tax lien that's shown up on their background check. The CP 504 is the final warning before the lien gets filed. If we act now before the LT11 hits, we can stop the lien. We can keep your record clean. But if you wait, if you hesitate, the machine files it automatically. And once it's on there, good luck getting it off. Withdrawing a filed lien is 10 times harder than preventing one. So how do we stop the machine? How do we inject a hold code into the system? Well, it comes down to 3 paths. You need to pick one today. It's not about what you feel like doing, it's about the math. So path 1 is the Streamlined deal, or the payoff. This is for people who have a job, making okay money, and just fell behind. If you owe under $50,000, the IRS has a special playbook for you. They don't need a financial statement. They don't need to see your rent checks. They just ask, can you pay this off in 72 months? If the answer is yes, we set up a DDIA, or direct debit installment agreement. And here's the hack. This is the magic key. I tell my private clients, if you owe under $25,000 and you set up a direct debit plan, the IRS will typically withdraw the lien filing requirement. They won't file it, in other words. You save your credit and you stop the levy. This is why I'm building, and basically should be coming out next week, the Tax Assassin app. You guys hear me talk about it, but this is exactly what it does. You scan your CP 504, the app runs the math, it calculates the 72-month term, it writes the letter for you. You don't need to pay a lawyer $500 an hour to do division. If you're in this bucket under $25,000 or a W-2 employee, and you just go to taxassassin.com once we get it up, and I'll let you know. Download the tool, fix it yourself. Then there's the Hardship Shield, which is path 2. What if you can't pay? What if you owe $40,000, but after you pay rent and buy groceries, you have $0 left? Well, this is the CNC status, so they're currently not collectible. We file Form 433F, and we have to prove to the IRS on paper that your income minus allowable living expenses equals 0. Now, allowable is a tricky word. This is where people get denied. The IRS has collection financial standards. And they have a specific number for how much you're allowed to spend on food, and they have a specific cap on your car payment. If you're driving a brand new G-Wagon and eating steak every night, IRS is going to give you a hardship status. They'll tell you to sell the car, but if you're generally scraping by, the IRS will agree to freeze the account. We enter the status code 53. No levies, no seizures. They leave you alone for a year or two, The debt is still there. Interest is running, but the guns are no longer pointing at your head. And keep in mind, those standards for how much you're allowed to spend change depending on the neighborhood. I mean, even the neighborhood, the state, the county, wherever you live. So it's a variable, and that's why people mess it up. So path 3, the nuclear option, which is the settlement. This is the path, of course, everyone wants, because the California company is offering and promises everyone can get it, when in reality only 12 people ever get what's called the offer and compromise, or the OIC, pay pennies on the dollar. Is it real? Yes. I settle cases like this every week. Is it easy? No. The OIC is a contract. You're settling the debt for a reasonable collection potential. To get this, you have to pass the Form 433A, or the OIC gauntlet. It's a full audit. If you have $100,000 in equity in your house, they aren't selling, they're not going to settle for $1,000. Why would they? They can just seize the house. But if you have no assets and no equity and limited income, we can settle massive debts for peanuts, because the math just says they'll never collect it anyways. And let me give you a couple of examples. The very first OIC I passed was about 8 years ago. A gentleman I know, who's a good friend of mine, owns an AC company, and he had a nasty divorce. His wife was friends with his so-called bookkeeper, and they never let him in the books. For 4 years, when I got involved, the 4 years of tax returns were never filed. The CPA or the bookkeeper would not let him see the book so he could file his returns, and it turned out he owed $218,000. We did an OIC. It was tough because we had to fight with the officer, but we got our way. And he happened to have the money on the OIC that we could pay. We settled for $56,000. So we went from $218,000 to $56,000, which he had in the bank, and we paid it off. And anything else his wife did and the bookkeeper did, well, that was a legal issue, and he took care of that too. I'll tell you about another one in a little bit. So there's also the do-it-yourself trap. Now, I want to warn you about this mistake I see people make every day. You get the CP 504, you panic, you call the 1-800 number on the notice. Please, don't do that. Here's what happens when you call the IRS without a plan. You wait on hold for 2 or 3 hours. You finally get an ACS agent. They're overworked, underpaid, trained to close cases. They'll ask you, where's your bank? And you tell them. They ask you, who's your employer? And you tell them. Congratulations. You just gave them the exact information they need to levy you next week. You just handed them a map to your money. And then they'll bully you. They'll say, to avoid a levy, you need to pay $800 a month. You know you can't afford $800 a month, but you're scared, so you say, yeah, okay. 2 months later, you default on the payment, the agreement breaks, the penalties have come back, and now the IRS trusts you even less. Never negotiate with the IRS over the phone unless you've run the numbers first. You need to know your allowable expense number before you ever pick up the phone. That's why I tell people, use the app to run the numbers or hire a professional to make the call. Don't go to gunfight with a blindfold on. So now we get to the final decision. So here we are. You have the information, you know the threat, you know the strategies. You have a binary choice right now. Choose one, you're the victim. Choice one, you're the victim. You ignore this, you hope it goes away, and I promise you in about 45 days, you'll be calling me in a panic because your paycheck is gone and your rent check bounced. And there's choice two, the assassin. You take the action. If you owe less than $25,000, you can hire me or you can try things on your own. But seriously, go to taxassassin.com, use the app, fight the algorithm with an algorithm, and it's $150 a month. It's cheaper than a parking ticket. But if you owe more than $50,000, if you own a business, if you have an unfiled tax returns from 3 years ago, or if the debt is from payroll taxes, Form 941, i.e. you have a business and payroll, step away from that. You need a firewall. You need a power of attorney. And when numbers get big, the IRS assigns a revenue officer who's essentially a human hunter. Do you want to talk to that person? No. You need to book a call with my team here at executivetaxsolution.com. and we'll file Form 2848, Power of Attorney. The moment we file that, the IRS is legally required to stop calling you. They have to talk to us. We take the bullets so you don't have to. So listen, the CP 504 is a wake-up call. It's a fork in the road. One path leads to ruin, the other path leads to freedom. You just have to choose the path before the LT11 shows up. So do yourself a favor, go to irsdecode.com right now, and I put a full transcript of this breakdown on the site so you can read the codes I mentioned, and then download the app or book a call. Don't let a piece of paper dictate your future. Once again, I'm Allen Lenth, and I'll see you in the hub. And before I do, I'll tell you the other story. I have another friend who owns a freezer truck business. He's been in business 16 years. The first 12 of those, he just hired CPAs every other year. He never had his books using QuickBooks. He never had his books right, and the CPAs didn't bother to try and fix his books because he was just hiring them for tax prep. They took the numbers, prepared his return, handed it to him. Boom, he owes $12,000 this year. Boom, he owes $4,000 this year. Boom, he owes $20,000 this year. It all added up to $600,000 by the time he met me. It took 2 years for the IRS to finally move, and by that time the interest and penalty added up to $1 million. $1 million. So, because of some other issues with his family, his wife moved out, they got a divorce, she took on one of his businesses with her, and the truck business he still has, which was never in trouble, but personally he owed $999,000, literally. We negotiated the payment to be, with the offering compromise, to be $230,000, which is close to pennies on the dollar. It's about 25%. But he had to sell his house to pay it off. But we got a solution. So once again, like I said, don't let the piece of paper, the CP 504 dictate your future. Again, I'm Allen Lenth, and I'll see you in the hub.